was a really mixed night on the markets, and in fact things started on a fairly weak footing yesterday in our part of the world. Asian shares were weak. We're seeing the usual weakness in the New Zealand dollar, but the mood actually changed in New York trade, and in the early hours of this morning things perked up quite a bit. US shares had quite a good rally going into the close, and the New Zealand dollar recovered on the back of that optimism. So amongst that all, we traded down below 66 cents against the US dollar and have perked back up 1.5 cents or up around 67 cents. So quite a strong morning. Of course, the New Zealand dollar is still very weak to where we were just a few weeks ago when we were up in the 70s, but a very, very choppy session. Back to our part of the world, well, there's no data out today for us to focus on, but yesterday there was quite a bit. We had the Fonterra announcement, and we also had inflation expectations coming out. That's a quarterly survey from the Reserve Bank where they measure expectations of a number of things, but inflation's the one that we look at the closest. And those inflation expectations are ticking up. They're getting up back towards the 3%, which is the top end of the Reserve Bank's target range. They're coming in at 2.9% in the latest quarter. And these expectations were taken before the budget last week, so they don't capture some of the things which are now certainties, such as a strong inflation surge from GST in particular, which is going to take inflation briefly up over 5%. Now, I'm sure farmers won't find that nearly as interesting as Fonterra's announcement yesterday. And it was great news to see Fonterra so confident to forecast a really good payout for next year. And there's quite a wide range of things that can happen between now and the end of the season, but it's a very positive sign for the New Zealand economy to have a strong payout forecast so early on, and it will bring cash into the rural community, which is a good thing.